Okay, let's kind of unpack this. It feels like the world of digital assets and, well, global finance generally is just a whirlwind right now.
It really is. You've got news hitting constantly, doesn't it? Market moves, big institutional plays.
Exactly. And security alerts, policy talk, trying to piece it all together and figure out what's actually important, it's a challenge.
Yeah, you see one headline here, another there, but getting the bigger picture, how it all connects. That's the key.
And that's really what we're trying to do here in this deep dive. We've gone through a whole stack of your sources, reports from places like O'Daily, TechFlow, BlockBeats, analysis from Bitwise, Centaura.
Market data, too, from Binance, commentary from SEB Research, statements from U.S. officials. Quite a mix.
Right. So our mission really is to be your guides through all this info. We want to pull out the most significant insights specifically for you, help you grasp what matters, why it matters, without, getting totally overwhelmed.
Consider it your shortcut, basically. We sifted through it. Now let's dig into what really jumped out.
Okay, let's jump straight into the markets then. There's definitely been some interesting movement. Looking at the Binance data, this is around early Friday UTC, Bitcoin had pushed past 108,000 USDT.
Yeah, trading around 108,020 USDT specifically, with that 24-hour decrease narrowing a bit to 2.30%.
And BNB also saw a move, surpassing 670 USDT, trading at 670.159973, with its decrease narrowing to 2.84%. USDT, of course, the big stablecoin pegged to the dollar.
And alongside those prices, something else really caught my eye in the data. This is from Centaura. The Bitcoin network transaction fees, they surged.
Surged how much?
Over 50% in just one day, 51.03% to be exact, hitting $6.43 million as of May 23rd.
Wow, over 50% jump in fees. And TechFlow mentioned this happened right as Bitcoin was hitting new highs. Described it as breaking above $110,000.
That's right. So what does that kind of fee spike tell us?
Well, it usually means more activity, right? More competition on the network.
Exactly. It's a really strong sign of intensifying on-chain activity. Higher fees mean more people are trying to get their transactions confirmed quickly, bidding up the price for that limited block space.
Yeah.
The Bitcoin mempool, like the transaction waiting room, gets congested.
So people reacting to the price moves, maybe that institutional interest we keep hearing about.
That's a big part of it, yes. Responding to volatility, institutional moves, just generally higher transaction volume, plus maybe some speculative interest around those big price milestones, it all feeds into it.
And speaking of institutional interest, that Bitwise data you mentioned earlier, it really seems to back this up, doesn't it? Corporate buying, exceeding new supply.
It's pretty remarkable. They found that corporate Bitcoin acquisitions just this year, 2025, have already blown past 3 times the newly mined supply.
3 times, just from corporations.
Well, specifically publicly listed companies. They added, 205,507 BTC to their balance sheets this year. In the same time frame, only about 64,556 BTC were mined.
Okay, do the math. That's a purchase-to-supply ratio of 3.18x.
Exactly. And Bitwise points out this doesn't even count private company purchases, so the real number is likely even higher.
Wow. So what did the Bitwise analysts make of this? They called it a structural evolution. What does that mean, practically?
It means they see Bitcoin moving beyond just speculation. It's becoming or solidifying its role as a legitimate part of corporate treasuries, a long-term investment strategy.
Like a reserve asset.
Precisely. And if this demand keeps up, especially with the halving cutting new supply, well, you could see real supply scarcity intensify. It strengthens that whole narrative of Bitcoin as a strategic asset, maybe even an alternative to holding fiat reserves.
And what's driving this shift, according to Bitwise?
It's a few things coming together. The halving in April, definitely. Big one. Increased accessibility. The spot Bitcoin ETFs are huge, making it way easier for traditional finance to get involved.
Lowering the barrier to entry.
Yeah. And then there are these bigger macro narratives, like all the talk around de-dollarization that might be pushing companies to look at alternatives.
And we're seeing actual examples in the sources, too, like DDC Enterprise, NYSE-listed e-commerce group.
Right. They just picked up 21 Bitcoins, part of their reserve strategy. It was about $2.28 million worth, done via an equity exchange.
And their CEO, Norma Chu, apparently has bigger plans.
Much bigger. She mentioned aiming for 100 Bitcoins soon, then 500 within 6 months, and eventually targeting 5,000 BTC over the next 3 years. It really puts a face on that Bitwise data,
It does. Shows companies are thinking years ahead with this. And it's not just companies, is it? Cointelegraph reported governments and even sovereign wealth funds are getting into Bitcoin ETFs.
Yeah, that report was interesting. It linked this to broader macroeconomic shifts, things like, again, de-dollarization talks, changes in energy markets, but also just growing confidence in these regulated crypto products.
Governments and national pension schemes putting money into Bitcoin ETFs. That feels like a significant step.
It suggests a potentially deeper shift. Maybe some of the world's biggest, most traditional pools of capital are rethinking how digital assets fit into the global picture.
Okay, let's pivot slightly to Ethereum, because its spot ETFs are also drawing money, right?
Definitely. The sources showed a pretty strong net inflow on May 23rd Eastern Time, $58.63 million in total for the ETH spot EPFs.
And BlackRock's ETHO was a big part of that.
Yeah, they pulled in $52.84 million just that day. Their total historical net inflow is now, what, $4.4 billion? Pretty substantial. Grayscale's Ethereum Mini Trust also saw inflows, about $5.8 million that day, bringing its total to $661 million.
So, similar story to Bitcoin ETFs then. Institutional interest, easier access.
Largely, yes. And analysts quoted in the sources point to Ethereum's fundamentals helping the case for institutions. Things like, the growth of layer 2s making it faster and cheaper.
Right, the scaling solutions.
Exactly. Plus the appeal of staking rewards earning yield on your ETH, and just the sheer amount of activity happening with smart contracts on Ethereum.
Okay, but here's a twist. The reports also mention significant outflows from some major U.S. Bitcoin funds on one specific day, May 24th.
Yeah, I saw that. Fidelity's FBTC saw, what was it, $73.7 million leave? ARKB was similar, $73.9 million out.
And Grayscale's GDTC had the biggest outflow, $89.2 million. If you add those up, it's over $236 million, leaving just those three funds in one day.
It definitely highlights the short-term volatility, doesn't it? Flows can swing day to day, but you have to balance that snapshot against the longer-term picture Bitwise is painting.
Yes.
Well, despite those single-day outflows, they're still projecting that governments and institutions together could hold something like 4.269 million Bitcoin by the end of 2026.
4.269 million Bitcoin. Based on current forecasts, that's huge. Like $426.9 billion worth.
Exactly. It really underlines that view of Bitcoin becoming a strategic asset for a whole range of big players, not just tech firms anymore. It's about long-term allocation.
Okay, so we have this picture of growing adoption, market activity, but we absolutely have to talk about the risks too, because they're still very real. The sources flagged a major security incident, the Cedus hack.
Yeah, that was a nasty one. A reported loss of $230 million. And Slow Mist did a deep dive into the technical side.
What did they find? How did it happen?
It was pretty clever in a bad way. They found an overflow vulnerability in a specific function, getDelta. Essentially, the attacker found a way around the safety check, the check-trull overflow detection.
So they managed to trick the smart contract math.
Precisely. They manipulated the inputs, so the function miscalculated how many HashUI tokens were needed for a swap. This let them trade a tiny amount of their own tokens for a huge chunk of the pool's valuable assets. Slow Mist called it a sophisticated mathematical attack.
And the takeaway from that?
Rigorous testing. Especially around boundary conditions and any mathematical functions and smart contracts, you have to validate everything, because one tiny flaw can lead to, well, a $230 million loss.
Yeah, and in the aftermath, Silent put out statements emphasizing their own security.
Right. They talked about their commitment to safety, working with partners like SpringSui and Steam, assuring users about fund protection from smart contract bugs. They mentioned releasing third-party audits, open sourcing code, standard best practices.
And there was some context there too, right? About a hacker possibly linked to Cedus depositing funds into Silent.
Yes, the reports mentioned a potential Cedus link hacker deposited about $10 million in SUI assets into Silent. The speculation was they might have planned to borrow stablecoins against it, shows how funds can move post-hack, and the potential ripple effects in DeFi.
Right, the interconnectedness. And there was another simpler security issue noted too, Hyper Foundation's Twitter.
Yeah, their official Twitter account got compromised. Just a reminder for the community to be cautious about anything coming from that account for now. Basic social media hygiene, but still important.
Definitely. Okay, let's shift gears to the broader regulatory and policy environment. The SEC in the U.S. is reviewing a proposal from NASDAQ PHLX about Bitcoin index options.
That's right. They've initiated a review. If this gets approved, it would be a pretty significant expansion of regulated crypto derivatives in the U.S., another step towards integrating crypto into traditional finance structures.
And fitting alongside that, we saw some commentary about the wider U.S. economic picture. Some differing views, it seems.
Yeah.
S Research's strategist, Jussi Hiljengen, had a warning.
He did on May 23rd. He suggested long-term U.S. Treasury yields might keep rising. And interestingly, he pointed to U.S. fiscal policy, government spending, and debt as a key risk that could trigger abrupt market repricing.
Why? What were his reasons?
A few things. He mentioned investors losing faith in the credibility of U.S. macro policy, foreign exchange hedging costs making treasuries less attractive compared to, say, European bonds.
Pushing capital elsewhere.
Right. And just the sheer volume of U.S. debt issuance pressuring the supply-demand balance. Basically concerns that the U.S. fiscal situation could spook bond markets.
Okay, so cautionary note there.
Huh?
But then U.S. Treasury Secretary Benson sounded more upbeat, also on May 23rd.
Yeah, quite a different tone. She mentioned expecting major trade deals soon, projecting hundreds of billions in annual tariff income.
Tariff income. Interesting.
And described the overall fiscal outlook as increasingly optimistic, particularly about reducing the deficit. So, clearly, different perspectives within the policy world about the path forward.
And speaking of tariffs, the sources also reported heavily on proposals from former President Donald Trump. We should stress, these are proposals or plans as reported in the source material.
Absolutely critical distinction. The sources noted his announcement via Truth Social, recommending a 50% tariff on all EU products, proposed effective date June 1st, 2025.
And the reasoning given.
It was framed as a response to what he called unfair trade practices and cited a $250 billion U.S. trade deficit with the EU. He also criticized the EU's VAT systems, the value-added tax, and other trade barriers.
Okay. And there was another tariff proposal mentioned about mobile phones.
Yes, plans for a 25% tariff on mobile phone makers who don't manufacture in the U.S. Samsung products made outside the U.S. were specifically mentioned as being subject to this.
But companies like Apple or Samsung would be exempt if they set up manufacturing domestically.
That was the idea presented, yes, with implementation apparently expected by the end of June.
Unsurprisingly, this stuff got people talking. Trump tariffs was trending.
It was. The sources linked the trend to these announcements, plus talk about potential additional tariffs on countries taxing U.S. exports, and Congress may be nearing a big tax cut bill.
And the discussion was around the potential impact, right?
Yeah.
Good for domestic growth or bad for global trade and inflation.
Exactly, that classic debate. And crucially for our audience, how might all this affect crypto and other risk assets? Uncertainty usually isn't great for markets.
Right. And we also saw a market pullback and ETH market watch trending, just signals of what the community's focused on, really.
Yeah, just indicators of sentiment and where attention is directed at the moment.
Okay, one last area, some specific ecosystem news. Polygon co-founder Mihailo Bielik is stepping down from the Polygon Foundation.
That's right. As of May 23rd, it's a notable change for Polygon. He was a key figure.
What's he planning to do?
He said he intends to stay active in crypto generally and will kind of cheer Polygon on from the sidelines, help out where he can. His fellow co-founder Sandeep Nailwal gave him a lot of credit for his role.
And this follows other founder departures at Polygon Labs over the years, doesn't it?
It does. Jayanti Kanani and Anurag Arjun also left their roles previously. Arjun, you might remember, is now heading up the Avail project, which spun off from Polygon.
Right, so we don't know Bielik's next move specifically?
Not yet, no. His departure comes after some recent Polygon activity, though, like that real estate exchange launch in March and the Geo Platforms partnership back in January.
So leadership change is happening, but the ecosystem keeps building. Shows the momentum, I guess.
Definitely. It's pretty typical of how these big blockchain projects evolve over time.
Okay, so let's just quickly pull it all together. We've covered a lot of ground in this deep dive. We saw market moves for Bitcoin and BNB, that really significant spike in Bitcoin fees.
Linked to that heavy on-chain activity and institutional demand, yeah. And that Bitwise data showing corporate buying just dwarfing new supply right now, over 3 times.
Then the sobering reality of the Cedus hack, highlighting those crucial security vulnerabilities and the need for super rigorous code checks.
And we navigated the complex policy world, warnings about U.S. debt, differing views on the fiscal outlook, and these specific proposals around trade tariffs coming into the conversation.
And seeing how all these different threads, a technical exploit, the company's reserve strategy, a potential trade policy shift, how they all exist in the same space, it gives you a much richer picture than just reading headlines one by one.
Absolutely. The context is everything. Understanding the interplay is key.
It really is. Which leaves us and leaves you with maybe a final thought to chew on. as we see corporations, maybe even governments, increasingly looking at digital assets for their treasuries. And at the same time, global powers are signaling these potentially major shifts in trade and fiscal policy. What does all that mean for the future, for the stability and integration of crypto into the traditional financial system?
And what new questions does it raise about risk, about value, even about things like sovereignty in this increasingly digital, interconnected world?
Definitely a lot to think about there.
For sure.
Well, thanks for joining us on this deep dive.